Hey, good morning, everybody. It's a huge day. Why? Because the Fed is going to be dropping data at 2 p.m. and then Jay Powell will be speaking at 2:30. So here's what people are expecting. First off, about 24% of the population are expecting 0% rate hike um, coming at 2 p.m. And then they expect extremely hawkish terms from the Fed. When the Fed, Jay Powell, speaks at 2:30, he'll say how there's going to be aggressive, how there's zero rate hike just because they're worried about the banking situation. They to stabilize the banks before they go back and worry about inflation. So that's your first scenario. Your second scenario is they're going to come in and they're going to say 25 basis points, and then they're going to speak more dovish or more calming, and they're going to say maybe we can pause on rate hikes because right now the chance of a rate hike in May is right about, I think it's about 50-50, maybe about 60-40. So that's what everybody's worried about, the rate hike in May, or will there be cuts by July? So the market also thinks there's going to be 100 basis points cuts by December. 100 basis point cuts on December. Well, you're not going to cut 100 all in one thing. So all at one time. So they're saying, okay, well, May will pause, and then July maybe we'll do a 25 rate point cut, and then maybe like October another 50-point cut. Listen, people are way ahead of themselves. What's most important is inflation numbers. So talking about inflation numbers, let's bring up our partner over in the UK. UK core inflation was actually 6.2. It was forecast at 5.7, and the previous number was 5.8. So 5.8 forecast at 5.7 came in at 6.2. That's core year over year CPI. Why is that important? Let's see. Let me just see if I got the other number. Okay, breaking numbers. UK CPI year over year. That was core. Year over year CPI in the UK came in at 10.4 this morning, about an hour, 2 hours ago. It was forecast to be under 10, 9.9. Previous was 10.1. So they expected it to drop by 0.2%. It went up by 0.5%. It went up half a percentage point. So core inflation CPI numbers in the UK coming in extremely hot, worrisome for our market, in my opinion. Now let's go back to the Fed. Again, the Fed has to take into consideration, look at what's happening to the bank. If we raise rate, it'll put a little more stress and pressure on the banking industry. Yeah, it'll do that, but you've been saying all along how you're going to stay adamant to keeping inflation down. If they come in back with a 0% or 0% rate hike, 0 basis points, I know the market should really like it, but I've got worrisome feelings that the market will be like, all right, they don't give a shit about inflation again. And, so we'll go back and forth. Now, somebody else that's very smart, I heard say, whatever the first reaction is at 2 p.m. when the Fed makes its announcement before Jay Powell speaks, if it goes up, they're going to fade it. If the market drops, they're going to buy calls. They've done their analysis. The last 14 meetings, rate hikes, they've taken the opposite position, and it's worked about 94% of the time. Now, I don't know that for a fact. I haven't run the numbers. It's an interesting theory. I'm throwing it out there for you. But here are the interesting dates. Okay, so obviously you have today, March 22nd. The next important date from today, March 22nd, is all the way at the end of the month. March 31st, we're getting our next PCE numbers. Okay, after that, the next important job numbers are coming out April 7th. Those are March numbers coming out April 7th. So again, today's the 22nd. Then you go out to the 31st PCE, April 7th, jobs numbers, April 12th, our CPI from March, and April 13th, our PPI from March. So again, those numbers are pretty important. The Fed needs those to gauge what they're going to do for May, but we're focusing on today. So let's remember Thursday when I told everybody that was watching me to screenshot it, and we were going to see 395, 396 on Monday because the markets were just consolidating. Remember, last week, Tuesday, Wednesday, Thursday, crazy inflow into our markets, volume spiking off the chain, right? Friday, consolidation. Who said that? Me. I expected Monday and Tuesday to pop. Well, I didn't expect it to pop that much. I really thought yesterday maybe we'd see 397, possibly 398 tops. I couldn't believe we went to 399. But if you joined me yesterday morning, my bear case scenario was we popped to 399 and we dropped to 393. That obviously didn't happen. We saw the 399. The bull case scenario was we drop at market open and we go up the rest of the day and we fade higher and we're going to see 400 or 401. Well, shit, we didn't get to 401 either. So I guess the range was a little narrower. I think we went to 395 and change all the way up to 399 and change. Yes, we didn't pass 400. Understand, 400 is a crazy, crazy psychological level. So let's just see where we're sitting right now, and then I'll give you my prediction for today, and I'll give you my explanation. Okay. Also, let's talk about volume real quick because this is crazy important. When we saw the market spiking last week, Tuesday, Wednesday, Thursday, inflow, volume was extremely high. Volume on the SPY was anywhere from 140 million to 150 million. Understand, Monday and Tuesday, which is this week, Monday and then yesterday, Tuesday, and I expect this morning as well, volume's going to be low. Volume's extremely low. I think we came in at 90 million yesterday, which is about 40% less than what we've been seeing volume in the market. So again, Monday was even slower in the market. So what that tells you is when we're having a slow volume day, markets can easily be manipulated. It doesn't take much. The same buying that took place, last week that didn't do anything to the market would control the market. So if you see an inflow of money going into the SPY, you can see the SPY spiking, which is, if we take a look at yesterday's chart, I mean, it was ridiculous. So we saw some short covering, I'm sure, yesterday. Why can I say that? Because I'll take a look at Affirm Technologies. Affirm, which was up 14% at some point yesterday, maybe even closed up 14%. I have no position there, but 47% of their users are making late payments. 47% of the people that use that platform, that site, that app are paying late. Well, their site is known for buy now, pay later. However, buy now, pay later, they're just not paying. All right, see you, Carlos. Here's another interesting thing. SPY, Max Pain. Max Pain going into Monday was 392 on the SPY. Remember, we closed at 389, so 3 points under Max Pain. So that number kind of seems irrelevant. Yesterday, Max Pain was 391. Well, shit, we closed at like 399. So again, or 398. So again, that number seems irrelevant. We missed Max Pain by 8 points. What does Max Pain mean? It means if the SPY closes right at the Max Pain level, the most number of options on put side lose out, the most number of option players on the call side lose out. So they're basically losing the IVs, they're losing their premiums. So it's Max Pain for the investor, for the retail investor. The Max Pain number for today is the SPY at 390. SPY hits or circles around 390, most people on the call side lose money, more people on the put side lose money. Now, where do I think the market's going today? I'll tell you in a minute, but first let's talk about Nike, because Nike, which had earnings after hours yesterday, popped 3% and then went down 3% and is now struggling, maybe down 1 or 2%. Here's the catch. Nike sales overall grew 19%. Well, that's awesome. They double beat top line and bottom line. Shit, that's awesome. However, their year-over-year inventories numbers from last year to this year are up 16%. Well, this is where all retailers are supposed to be working on their inventories, taking their inventory, which is extra cost, taking their inventory numbers, getting them down, not going up 16%. Nike. Why might it have got up 16%? Well, China sales were down 1%. So if anybody's struggling or if Nike's struggling, those are the reasons. Fast money, final trades yesterday. What do they like? Snapchat. Why am I upset? Because I am bearish on Snapchat. Let's remember the last time Snapchat ran up to $12.50, I became a bear. What happened? It dropped under $10 3, 4, 5 days later. So same thing. I'm looking at Snapchat. I was looking at the end of day when the markets were running higher. Snapchat was still at 1136, 1140. It wasn't moving higher with the markets. I looked at the outflow. The outflow was substantial. So now you've got these two guys on Mad Money or Final Trade, CNBC Fast Money, saying, yeah, their best trades are going to be Meta or Snapchat, whatever. But people are unloading Meta. They're unloading Snapchat. So again, I'm perplexed about my position about carrying it forward. One thing I pointed out to Discord. So here's your last few days, or last few minutes of the SPY yesterday, right? So we got a steady outflow for the past 8 or 10 minutes of the SPY, and that's when we saw about 20 million of the 91 million happening. So it was kind of outflow. So again, it tells me smart money is taking their money off the table, taking their putting it on the side. That's what I did yesterday. It's talking about 85. Okay, so they're talking about a 25. There's a 60% chance of another 25 basis point rate hike in May. So that's what the market's going to be listening to. When Fed Chair Powell speaks at 2:30, they're going to be hearing what he says going forward for May. They're going to be hearing to see if he's as hawkish. If he's hawkish, then 25 basis points is still going to be on the table. If he comes in calm and he talks about the banking crisis and he focuses on that and he's saying, inflation, yes, we have a worry about inflation, but we're really concerned about the banking industry and the financial industry, then people will be like, okay, maybe not 25 basis points in May. That'll be a strong sign for the market. So again, that's some interesting shit right there. Here's what I was pointing out. Here's the chart I was looking for Discord. Now, what you can see is ever since March 10th, we've been in an up cycle. 6 out of the last 7 trading days. I mentioned we saw consolidation and the market's been ripping higher. We were at 385. Now we're closing on 400. What happens if all of that turns around? And we've seen all of that potentially turn around in the day. So let's say the Fed comes out and they're extremely hawkish. Let's say they raise 25 basis points, which people are expecting. And then they come out with hawkish terms like, shit, banking crisis sucks. We don't want the financial industry to, evaporate, dissipate, be non-liquid. And then they come out, but they say, but we still have to do what we have to do. Us at the Fed, we still have to curb inflation or else that will lead to recession. So if they come out talking strong like that, it wouldn't surprise me in 2 days if we give back everything that you see there. So I'll give you your bull case scenario. Bull case scenario, which I stated towards the beginning of last week and the beginning of this week, is Fed comes out, they do 0% or points rate hike. They'll announce that at 2:00 and they sound more dovish and they maybe even talk about cuts coming in the end of the year. What would happen? The market would skyrocket. You'd see 409 on the SPY. The markets would be up over 3% today. Okay, and that's how they would close the day. I'm not saying it's happening in the morning. I'm not saying it's happening at 2:00 or even 2:30. I'm telling you, if the Fed's comments are dovish or calming, we're going to see the markets rip higher. I'm hoping not, because to me, that doesn't make sense. We still have the war in Ukraine. We had Chinese President Xi met with Putin. They're like best buddies now. I mean, it scares the shit out of me what they could be up to. Anyway, but complete market sell-off. If we saw a sell-off and the Fed is extremely hawkish, and the only way you see a sell-off where we go down and fill everything that we've made up in the past week is if they come out and they say 50 basis points, which is probably less than 1 or 2% happening. However, if you didn't have the banking crisis, I would 100% say 50 basis points was the way to go. Now, a couple of days ago, I said 0 was the way to go. I've rethunked that. I thought, 0 is kind of setting the wrong tone. It's telling the market that they really care about the market, and that's why the market would shoot up. You see 0, market shoots up. You see 25 basis points. There's definitely going to be some sporadic movement at play. Here's an interesting scenario. Yesterday, right before the market closed, 3:30 p.m., we saw a 33 ask side put on the spike. So an ask side put on the spike. Remember, if you're paying the ask, that means you aggressively want to go in on that. So you're paying the ask, right? That means you want to aggressively buy that. So that's bearish, okay? If you're selling the ask, if you're selling it at bid or under bid, that would be somewhat bullish. So again, that would be somewhat bearish. Again, not much is going to happen. We're going to trade a range. So I looked at the GEX. Let me just see one thing. Just looking at some certain stocks. I thought I had it here. Yep, there's Carvana. Carvana is ripping this morning. Let's remember, everybody, what did I tell you all last week? Where did I say Carvana had a chance to rip to in the next couple of weeks? $9.50. If you join me every morning, I do speak about individual stocks. Carvana is at $9.41, ripping this morning up 23%. Now, Matt, how did you come up with this? How do you always say this stock should rip in the next week or 2 or 3 weeks? Remember, I'm still holding, Wish. Let's see where Wish is. I don't even have it on my watch list, but I actually believe Wish, which is Context Logic, will rip up to 81 cents per share in the next 2 months. 1 month, 2 months, it's at 40 cents. So I think it'll double at some point, and it'll happen in 1 day. So you better be watching it so you can get the hell in, get the hell out. I'm looking at volume on Carvana. It's only 350,000, so it's not completely crazy. But if you look at the chart, you can see inflow. So it's only a matter of time before this one ripped higher, because this one's like a meme stock. Speaking of meme stocks, let's talk about GameStop. GameStop came in after hours with earnings, and now GameStop's ripping up 50% in the morning. Of course, its sidekick, AMC, which has nothing to do with GameStop, except for it's a meme stock as well, is probably ripping up 8 or 10%, maybe more this morning, just because of what you're seeing happening with Carvana and GameStop. Oh, my God, Carvana's up over $10.50 right now. I am so pissed because I was in those $7 calls last week. They expired last week. So talk about somebody who didn't give themselves enough time to be correct. Oh, I made profit on those Carvana options. Remember, I was in at $6.66, and I said I was looking for it to rip past $9.50. Well, it's ripping there, but it's still ripped all the way to $8 when I got out, $8.04, something to that extent. Okay, so that's Carvana. Let's talk about a couple other stocks. Again, the SPY right now is sitting down, a fraction. It's down 0.08%. What's likely to happen? Okay, this is what I wanted to bring up. What's likely to happen in the market today? Well, what do? Well, shit, we all know that I go over to Discord, and what do I like to do on Discord? The first thing I do is I'm looking at the GEX levels. Can you guys see that with me? This is as large as it gets. Let me remove myself, see if it gets larger. It does not. So GEX levels for the SPY. So it's telling me where the SPY could go around. So I'm looking at it. 405 this level. Yeah, there's some buying. There's some selling. 393. Here we go. 382 all the way here. So I think the level was 395 that I was kind of focusing on right around here. So at 395 is an important level. So what does that mean to me? Well, it means as we're sitting at 399 or 398 pre-market, I happen to think we're going to drop down to 395 at some point during the day. At some point before 2 p.m., I'm thinking we're going to 395. At 395, I might choose to exit my put options. What else am I going to do? Okay, well, I've already done it. So I looked at the guest levels. The first thing I do is I go up here and look at the net flow for the entire market, okay? Not for the SPY, not for the Qs, not for anything else, but for the entire market. What am I looking at? Well, the cost put for premiums is still extremely high, and it was spiking towards the end of the day. Even though the market was ripping higher, people that were in puts did not give up on puts. Interesting enough, as the market was going higher, the cost for calls were going up as well. You can see that in this green line. So it's a rarity. Usually when you see both of these going higher, it means that there's increased volatility, increased, mentioned that the market will likely chop. And when it chops, it'll probably be somewhat substantial, especially since I think we're going back to here, let's say 396, maybe even 396. I think 395. So 396 all the way up to 399. I think we're going to range trade until 2 p.m. When the Fed speaks. So what else am I looking at on Discord? I'm going to go here, and then I'm going to scroll down. Here's your algorithm. So your algorithm is telling you, your algos are telling you the market makes more sense, and the computers think the market should be closer to 397, 397.20, whereas the markets were ripping higher all the way up to 399. Why is that important? Well, the algorithms are usually what trades the market. We're trading against computers 80, 90% of the times. So yeah, I mean, I'm expecting, again, they generally meet at some point and they cross over. This was just yesterday. So we can see yesterday we had a cross here, cross here, cross here. They almost touched here, and they're a little far away here. So right now they're a little far away. So yes, I expect them to come up. So either the algorithms will come up here, maybe to 398. The price of the SPY will come down here, 398. If the algorithms drop on open, let's say they come down here, 396, the price will likely drift down to 397, and they will likely meet up 1, 2, 3 times this morning. So again, you could always look at the algo flow if you're on our Discord. You could look at the GEX level if you're on Discord. And what else can you look at? What else do I like to look at? The dark pool level if you're on Discord. So that's good. So that's another thing I look at. And I'll go to the dark pool level for the SPY. Here we go. Now, again, yesterday's volume was extremely light. So I'm not really paying all that much attention to the dark pool activity from yesterday. Again, when there's light volume, it's easier to manipulate the market to push in one direction or the other. Okay, so let's say we crash. Let's say we crash and burn the lower end of the spectrum, 384.63. So 385. So again, bear case scenario, Fed's extremely hawkish, 25, possibly 50 basis points. 50 basis points, we go down to 385. 25 basis points, hawkish talk. Then I think we're going down to 390 to 392.67, somewhere right in this range right here. Again, you'd have to have 25 basis points, and then Fed Powell would have to come on and sound extremely hawkish. They haven't given up. They're definitely not cutting rates. They're definitely going to do a rate. He likes to forecast or foreshadow what he's going to do. What else do we see? 395. So I mentioned the guest level at 395. That's why it wouldn't surprise me if we happen to fade down to 395 once, twice, 3 times before we go up at 2 p.m. Again, the level there, which could be level of support, is 30 billion. 398. We easily passed through that yesterday. It was like there's no level here at all. And then you're going all the way up to 471, which we did not see yesterday. The market ended up rejecting. So again, let's do bull case scenario. Bull case scenario is Fed is calm, 0% rate hike. Boom, the market is sitting at 401 at the time or 399 at the time, and it shoots all the way up to 406, 407, 408. There's your bull case scenario. Bear case scenario, extremely hawkish. We can't break that 400 number all day. 400 rejects. We're back to 397. 399 rejects. We're back at 396. Fed comes out. They're extremely aggressive. Where do we see the market drop to? We see it drop to 390, 391. Finds a little support, and things get a little worse later in the week. So that's what I'm seeing right now. Again, I can talk about certain stocks, but certain stocks, they're all going to look the same way. If the market comes out and it rips after the Fed, then what do I want to be in? Well, shit, I'd want to be in financials. I'd like to be in some upstart. Coin will continue to rip. I've mentioned DraftKings and Carvana, but Carvana's already up to $10 this morning, so I wouldn't be chasing Carvana. I'm pretty pissed about that. Pinterest has had support, but I'm hoping Pinterest and Snap and Meta, I'm hoping they go down. I mentioned Salesforce would probably pop. Again, Salesforce, I almost got into it yesterday at 184, thinking it would pop all the way up to 190. It closed at 180, 189 or 188, almost 189. It's tough to talk about individual stocks this morning. I thought Boeing would get its, we'll stay away from Boeing. The point is, all these stocks are going to follow the market's directions. So everything's based on the Fed today. So even if you're day trading or not day trading, if you don't know, here's what I would suggest. Stay on the sidelines. If you're looking for a trading strategy before the Fed speaks, I might suggest UVXY or VIX or even SPY, 0 days till expiration. Now, I never say that because they're extremely risky. But again, if 2 p.m. is here and 150, and if you get into calls and puts, you get into both of them, what's likely to happen after the Fed speaks is the market's likely to rip higher, down, higher, down, higher. We're probably going to see 3 or 4 direct movements. So the point is, if you get involved with 0 days till expiration options, or I do, because that's probably my game plan, around 1:50 p.m., I'm going to go in. I'm going to buy what I consider to be the bottom of that range prior to the Fed speaking. I'm going to buy puts towards the top end of that range. What am I going to look at? Probably like 20, 25%. That way, when the market rips higher and lower and higher right after the Fed's announcement at 2 p.m., great, it rips higher. Guess what? My calls just sold. Oh, it drops. Guess what? My puts just sold. If you're sitting there on the sidelines watching, going, okay, I'm going to put in a sale order right now, you're not going to get it. You must plan in advance. When you're taking a tricky strategy, which is playing both sides into the Fed announcement, it's all about planning. It's about planning. You're looking at the 0 days till 0 days till expiration. You're looking maybe $2 out of the money on the top side, $2 out of the money on the bottom side. So you're out of the money. Again, if the SPY is sitting at 398, you're going $400 calls, and then you're also going 396 puts. Then when the market rips up to 401, guess what? Your calls are being sold. Then when it drops 2 minutes later to 398, now your puts look golden and people are buying your puts. Again, make 30% here, make 25% here. Call yourself done in trading. It doesn't mean you have to have an emotional tie to, damn, this market better rip higher. Because I know there are people that bet the farm on the market going higher. What Matt said last week, consolidation on Friday. Markets ripped higher Monday, Tuesday on light volume. We saw them go higher last Tuesday, Wednesday, Thursday. So your Tuesday, Wednesday, Thursday, consolidation on Friday, ripped higher Monday and Tuesday. Well, that's pretty bullish for the market. Again, bullish for the market when we have this crazy banking scenario where you have the government talking about they need to insure all non-insured deposits. Well, the government's never done that. That's the point about the banking system. The banking system, they take on the risk of these deposits. They take on the risk of how they're going to invest these deposits. And the banks that do a good job, their stock price goes up because they make more money. Now, if you have the Fed coming in and the SEC coming in and saying, we're going to support every insured or every deposit in the bank, to me, that's a little bullshit. I mean, shame on the banks, shame on the people for not doing their homework. Okay, let's go here. Okay, so what else do we got? Let's see if we have any questions here. Yes, smash the like, people. I mean, you're watching me. Please smash the like. I'll be back tomorrow morning. So tomorrow morning is going to be a great episode as well because we're not done. We have Thursday and Friday understanding that we could run out into some lottos. So I'm going to be talking about lottos, lotto plays all tomorrow mornings. I'll be talking about these stocks based on the Fed's reaction. I'll be like, okay, well, shit, the Fed came out, the markets dropped. Amazon could come down back to the $92 range. Or Amazon's popping, it should reject 104.50 because that's a rejection level. If Amazon shoots past 104.50, it'll probably rip higher to 110. So that's interesting. Let's see what else we got. Carvana short up 17% past 2 days. Now we've made it up 40%, right? Yeah, because it keeps going higher. Okay, here's an interesting one, Matthew. You're mentioning Ford. So here's the thing about Ford. If you look at Ford, and I follow Ford only because Ford some days can move 40 or 60 cents, and the options are so damn cheap. So whether you're on calls or puts, if you get the movement right and you're like, oh, Ford's going lower and it's 1173 this morning, it can drop to 1125, which is a rarity for Ford to move 6.5, 6, 7%. But yesterday you'll see it moved 54 cents higher, which is 4.8%. If you look at the calls from yesterday, they ripped higher 93%, 135, 180, 150%. So Ford's interesting. Now, what I do is I'm looking at the 1 month on Ford, and I'm just going to show you on my Webull app right here. Okay, this is Ford stock. So what do we see towards the end? We see huge selling 3 days ago in the market, followed up by a little sale 2 days ago and yesterday where they were buying. Where are we at? We're at the same point we were at 3 days ago before the huge selling. So you could say to yourself, well, the huge selling, everybody that wanted to sell got out of Ford. So yes, it should likely push higher. And that's what we've seen for 2 days straight. Even with an outflow day 2 days ago, Ford was pushing higher. However, you say to yourself, the other end of the spectrum is, well, shit, they were getting out of Ford for some reason. Ford has the ability to go down more. Nothing goes down all in one day. It's not like everybody unloads and that's it, and then it bounces right back up. What do we used to see after earnings? We'd see a stock dip. It looked like it wanted to rebound as it fell off a cliff, and then it would dip later by that Wednesday or Thursday. So again, there are so many stocks in my watch list that follow the same look as Ford, which is heavy outflow 2 days ago, big drop. Last 2 days off of extremely light volume, and we're back at the same point as Ford was before the drop. So what does that tell me? Well, it tells me if things get ugly for Ford, you're going to see $11.19 again, which is down 6%. Again, if the market gets ugly, Ford's going to drop. Ford doesn't have the support. I saw people selling Ford huge block trades at $11.28. Well, we're at 11.72 right now. So that expects, again, Ford could either pop because everybody that sold their shares is already out and they're already done selling their shares, or Ford can drop because there's still more shares to be sold. So there are so many stocks. I mentioned Upstart, right? So Upstart, I was in at $14. I gave the alert out to Discord, $14. It popped all the way to $15.40 yesterday. $14 a day ago. So $14 I get in Monday afternoon. Tuesday, I get out at $14.77. I made 74% on my trade. After I get out, what happens? It goes up another 70 cents. Would have been so much better to get out with 220%. So sometimes I don't hold as long as I should. I come up with a good trading strategy. Again, I was bullish. Upstart. Anyway, okay. Let's see what we got. Hey, Bruce. I don't mind Bruce Willis. John Travolta, he sounds good. My beard's got to be a little darker. Thoughts on Roblox puts 1 week out. Okay. First thing I would tell you is give yourself more than 1 week if you're going puts on Roblox. Second thing I would tell you is I would certainly wait, and it's more risky, but it's also safer for the Fed to speak today. Anybody that's thinking about getting into any position, I would wait till the Fed speaks today because as we saw yesterday, the market ripped higher on light volume. It could easily rip higher on light volume this morning. It could easily drop on light volume in anticipation of the Fed's talks. So I'm looking at Roblox. I mean, Roblox is one of those companies. It's like Upstart. It's like Affirm. Affirm was up 14% yesterday. Upstart was up. Pinterest, Snap. They don't really make money. They're more speculative plays. But yes, I mean, if you look at the Roblox chart, it looks good. Now, here's the catch about Roblox. My two girls, 6 and 10, are home on spring break, right? We're not going anywhere, watching the markets. What are they doing all the time? Playing Roblox. Now, I never give them money for Roblox, but my ex, she gives them money for Roblox, and they spend it like that. So the fact that, and they're on with their friends. They're on their iPads. Their friends are on the corner, and they're sharing their screen. Hey, wait for me. Catch up. Let's jump over here. Let's do this. They play together. They spend money together. The accounts get hacked. So it's crazy. I would usually be more pessimistic on Roblox, but now that I see how much of their friends and they're using it, and it's a fourth grader and a first grader, it's crazy. Doesn't matter the age difference. They're using it. They're getting money, Roblox money, to put money into Roblox to buy things like Lamborghinis and houses and shit like that. I would be extremely cautious. I would not average down. So you bought it yesterday, you're down 14%. Let's say you have one contract. I would not average down on it. I mean, if it doesn't go well, I mean, here's the greatest lesson about yesterday. I took a stop loss, okay? This is the best news I've ever done because I usually am too pig-headed for this. I said, I think coin is going down. Coin was like at 82. I think coin's going down. I bought a coin put. I paid $1.25 for it. Then coin went up 50 cents from where I purchased it. I've got a put or two puts. It goes up 50 cents from where I purchased it. And my option, my put option, is only down $1. And I said, holy shit, I paid $125. I could sell it right now for $124. Let me sell it and get the hell out because coin's up 50 cents from where I purchased my put option, which is the wrong direction. So I sold it and I lost $2 on the one trade. Yes, I used a day trade for a small account. Oh, so be it. Now, an hour later, I looked and it was still sitting at 123, 124. So I'm like, oh, shit, man. Seller's remorse. Maybe I shouldn't have sold. Again, I only lost $2. I checked an hour later as coin was popping yet again. And the option that I would have paid, what was it? $1.25, or I did pay $1.25, sold for $1.24, was under $1. So when you're looking at it, I'm saved myself 25, 26% on one trade. Yes, it sucked for me to enter and then get out. I felt stupid. Hey, I just bought this. Hey, I'm just selling this. Coin is up 50 cents. I'm only losing $2 on the trade. But yes, you can do that. You could also set stop losses if you're not watching it like that. Good morning. Okay, Nike. I mentioned Nike this morning. The problem with Nike was, again, they beat on the top line. They beat on the bottom line. They beat sales growth up 19%, double beat top and bottom. However, year over year, inventories were up 16%. Inventories for any retail store, whether it's Macy's, whether it's some home store, Dick's Sporting Goods, whatever. If inventories go up, Ross stores, TJ Maxx, that's not good for the company. That adds on additional costs. Their gross margin was slightly down, and China's sales were down 1%. And China supposedly reopened. So why would Chinese sales be down? So again, gross margin down, never good for the company. Chinese sales down 1% year over year, and inventories up 16%. So I don't care if you beat top line and bottom line. There are other things that people are looking at. What do you think? I think they should insure and make banks pay it back. It's interesting. Yeah, I mean, they're talking about banks, CEOs of banks, and people that got bonuses in these banks for the past 3 years. I've even heard 5 years. They might ask them. I mean, these are the politicians saying, you know what, they should pay back their bonuses. They should. I mean, it's easier said than done. How about I bought this house? How about I bought this car? How about I'm down on my luck? I don't have any money, and you're asking me to pay back a $250,000 bonus that I got 2 years ago. Shit isn't going to happen. It's a nice sentiment, but it's not going to happen. Yeah, kids are doing the same thing. So, yeah, I mean, that's where we're at. Again, I look at, let me get rid of all these things. I have all these things going on. Right, back to Discord. Again, I was looking at the dark pool levels. Dark pool levels aren't telling me that much. I'm really focused on the GEX levels. You can see if we're having a red or green GEX, where the price points are for the SPY. So again, if I had to make a prediction before this Fed speaks, I say we go down and we might touch 395, 70 something. That's your downside. Your upside, if we go higher, I think it will probably reject just over 400. Again, psychological level. So you're like $400 and like 32 cents, 395, 70, trading in between that range, watching volume, of course, but understanding that the Fed is going to speak, drop data at 2 p.m. Again, they're factoring in about a 79%. It's going to be a 25 point rate hike. But what people are going to be focused on is the Fed. They're going to talk about the banking crisis. They need to. They're going to talk about the financial system. They need to. So you really want to hear if they tip their hat to say what they're planning on doing by May. And then again, you want to listen to if they say there are going to be any type of rate cuts. Rate cuts by the end of the year will be good for the market, will be calming. But understand, the Fed's got quantitative tightening, quantitative easing on their balance sheet. They still have to reduce their balance sheet, which is probably in the $8.1 to $3 trillion range. They want to get it down to $3.5 trillion. So they want to reduce their balance sheet by like 60% still. They haven't had the chance to reduce their balance sheet all that much. They probably reduced their balance sheet going back probably like 6 months now. It's still not enough. It's still not enough. That's all I can say. Heading over to Discord, going to do my video there soon. Please join me. And I think